Zone 3.
Mr. Buffett, Mr. Munger, I'm Tim Medley from Jackson, Mississippi.
We're glad to have you back, Tim. Tim, how many years have you come?
This is my 11th.
Good.
They've been 11 great years. Thank you very much. At this meeting 4 or 5 years ago, you commented that money managers in the aggregate have not done better than various market indices, and you attributed this in part to the frictional cost inherent in an actively managed portfolio. I wonder if today you would update your thoughts on this, and do you think that this underperformance compared to index funds will continue? And then a related question, if the two of you were giving advice to a classroom of equity mutual fund managers, are there 2 or 3 things in particular that you would want to suggest to them?
Yeah, well, I would say this. Money managers in the last few years since I've made that statement have not disappointed me. In aggregate, they have underperformed index funds, and it's the nature of the game. They simply cannot overperform in aggregate. There are too many of them managing too big a portion of the pool. And for the same reason that the crowd could not come out here to Exarban in the past years and make money in aggregate because there was a bite being taken out of every dollar that was invested in the pari-mutuel machines, that people that invest their dollars elsewhere through money managers in aggregate cannot do as well as they could do by themselves, creating their own index fund, or it'd be easier to have just to buy into an index fund. It's they say in this world you can't get something for nothing, but the truth is money managers in aggregate have gotten something for nothing. I mean, they've gotten a lot for nothing, and investors have paid, and the corollary is investors have paid something for nothing, and that doesn't mean that people are evil. It doesn't mean that they're charlatans or anything. It's the nature. If you've got a $6 or $7 trillion or whatever it may be equity market, and you have a very significant percentage of it managed by professionals, and they charge you significant fees to invest with them, and they have costs when they change around, they cannot do as well as unmanaged money in aggregate. And it's the only field in the world that I can think of. Charlie will think of some others, but where the amateur, as long as he recognizes he's an amateur, will do better than the professional does for the people whose money he's handling. And therefore, if I were teaching this class or speaking to that class, I would probably tell them that for their own psychological well-being, they should probably leave the room. Charlie?
Well, I pretty well said what I had to say on this subject in that talk I gave at USC, and anybody that wants to read that can read it. I will say that one of the things I like about the annual meeting is I get to interface with a whole lot of people that have even lower annual investment management expenses than Berkshire Hathaway, the company, does. I mean, if you stop to think about it, we've got our costs almost to zero, and many of you have gotten it to zero.
Yeah, Charlie and I would be glad to take any money management organization in the world that manages just been handed a note. It says, unfortunately, we don't have extra annual reports on site. Those shareholders desiring one should call us or write. So, and we're also on the internet. You can run it off there. So I apologize for not having them on the here, but they're easy to get. Just dial 346-1400, and there's an annual report line, and you'll have one sent to you. We would be willing to take any money management organization in the world managing $10 billion or more, and in the case of brokerage houses who have their brokers in aggregate handling $10 billion or more, and we would be willing to bet that their aggregate investment experience over the next 5 years or 10 years for the group that they advise will be less, will be poorer than that achieved by a no-load, very low-cost index fund. And we'd put up a lot of money to make that wager with anybody that would care to step forward. Gambling may be illegal, but now you can do it through something called derivatives, you see. And we could create an instrument that would allow that, even though it might be against the laws of the state of Nebraska. Charlie, would you join me on that? Or?
Well, I certainly agree with you. I always say that exactly 1/5 have to be in the bottom 20%. And there are certain fundamental forces at work here that, but it is a very peculiar profession where you have to be in a state of psychological denial to shave in the morning if you do the work. I don't think that's true for a handful of investment managers. I think we know investment managers who add value, but it's a comparatively rare and small percentage.
Yeah, we have identified in the past, even, I mean, on a prospective basis, not retrospective, managers who have added value, and there's a couple of them in this room.
Well, and there's Lou Simpson of Geico.
Yeah, well, he's one I had in mind. You know, you can do it. You can't do it with unlimited amounts of money, and a good record tends to attract money. Even a mediocre record presented by a good salesperson tends to attract money. But there are people working with smaller amounts of money that where the probabilities are that they will do better than average. Excuse me. Where the probabilities are that they will do better than average, but they're very rare. Incidentally, I apologize on this voice. I had to leave Garage early last night, and there were a number of you I was hoping to see, but it was gone entirely last night, and then I managed. I'd like to tell you I did it by cherry Coke, but I managed to nurse it back to where it's working again in reasonable shape.
My name is Bob Costa from Evansville, Indiana. I've been a shareholder for 4 years. This is my first visit to Omaha, and I went to the Mega Mart, and I actually bought something there, and I tried to pay for it with an American Express card, and they told me, just like the ad, you can't use it here. I hope you both comment on that, or at least one of you. But my real question is that I just stumbled across the idea of intellectual capital and how that might be useful in valuing a business. And I was hoping that one or both of you could clarify that for me and whether that's useful to us as investors or just another academic theory that we'd be better off ignoring.
Yeah. Harvey Golub, who runs American Express and has done a terrific job of running it, has written me about the Furniture Mart as well as about See's. And we basically let our managers run their own businesses. So the people at each entity, Borsheim takes American Express, others of our businesses do too. We let every manager make his decisions. As soon as I start telling the managers that they ought to say take American Express or not take Visa or whatever it may be, you know, at that point they've lost some of the responsibility for their operations and perhaps to an extent even, you know, some of the pride that comes from running them. Most of our managers do not need to work for a living. They run their businesses for the same reason Charlie and I run Berkshire. They love doing it. They jump out of bed in the morning because it's exciting to do. And the one thing that would keep the two of us or drive the two of us away from Berkshire is if we were getting second guessed all the time or somebody else was telling us when to swing or not to swing. We would have no interest in running the business. We'd do something else then. And maybe our other managers aren't as extreme as we are in that respect, but we feel they've built successful businesses. They know how to do it. We do allocate the excess capital they generate, but aside from that, we really let them make their own decisions. So we have no company-wide policy on virtually anything that I can think of except send money to Omaha. And you know, we're delighted to have American Express give the Furniture Mart the reasons why the Furniture Mart will be better off using American Express. And my guess is they have some very good reasons. But they're going to have to sell them on that. And just like any vendor of anything has to sell each operation, we wouldn't tell the people at Seas who to buy the nuts from, or who to buy the container from, or anything of the sort, how to design the stores or whatever it may be. And that's just the Berkshire philosophy on that. Charlie, you want to come in?
Yeah. Let me shift to intellectual capital. Berkshire has a lot of intellectual capital in these very able executives in the various businesses, and we hope we've got some intellectual capital in the few hundred square feet at headquarters. But we are not in the business of designing oil refineries with armies of engineers, or developing software with armies, doing complicated accounting work all over the world. We just haven't drifted into that kind of a business. And intellectual capital has gotten to be a new buzzword because we've now developed huge businesses like Microsoft, which really didn't exist on that scale not so very long ago. And so people have suddenly realized, my God, there's really a lot of money in aggregation effects and momentum effects when you get a bunch of really bright people working in the same direction. And that's what's made the concept so fashionable. By and large, we've avoided the field. Again, it's hard for us to understand.
Yeah, we've looked for brains and energy and integrity in people that we work with. And if you get that combination and you're in a decent business, you're going to own the world. And whether you call it intellectual capital or anything, you can stick the names on it. And that's who we try to associate with. I mean, it's a lot easier than doing it yourself. And when we get in our own businesses, you saw that group there at the end of the movie. I mean, that's a huge asset to Berkshire. They talk about getting into accounting for it. That's nonsense in my view. I mean, you don't need to do that, but you should pay for it, and you should pay for it as shareholders. You should pay for it as managers. When we get people, whether it's Tom Murphy or Al Zane at Gillette or Roberto Goizueta or Michael Eisner, I mean, those people have added billions of dollars of value, and it's just, that's who we want to be associated with, and we don't want to be associated with the mediocre managers, because the difference is huge. But we don't go through an elaborate exercise. We just recognize the people that have got those. We try to recognize the people that have got those qualities, and then if they're in a good business and they've got those qualities, we want to take a big bite.
But take intellectual capital. People think patents. They think copyrights. Patents and copyrights have gotten to be way more valuable as a percentage of the investment assets of the world. And so people are very much more interested in intellectual capital. Think of the great drug companies and how small they were 20 years ago, and how everything they have is basically intellectual capital. It's the few products that really work that have the patents. But by and large, we're not in drug companies.
No, but there are different forms. As Charlie said, there's businesses you sort of think of that way as their whole being intellectual capital. But I would argue that when Roberto Goizueta 15 years ago saw how to make the future of Coke, same product, dramatic, and basically the same system, although it required some changes, but saw how to make that dramatically more valuable by doing a lot of little things over a long period of time and doing them consistently and not getting his eye off the ball. Michael Eisner did the same thing. Disney hadn't gone anyplace, in the 15 years or so after Walt died. Now, we all knew who Mickey Mouse was and everything, but Michael really saw what the future should be, and he still does. And how you can say it's easy when it's all over, but how many people were doing something about it at the time? The place was languishing basically 15 years ago. They had the assets, and to me that's You know, it's different than what Bill Gates does or Andy Grove does, but it's our form of intellectual capital, and it's one we can understand better. Zone, what do we have? 3.